now the same. You will be able to. Yeah. Good day, Mr. Albert. Can you hear me, sir? Mr. KL, can you hear me? We'll test the mic once again on this platform because we'll be going live on this Monday. Can you unmute and speak just to check the audios? You need to unmute, sir. Are they able to do it?
I'm not. I just opened. Are you going to mute everybody?
Yes, we are by design. Like we will mute everybody except for speakers.
Okay. Yeah.
So
good.
All the speakers will be put as co-host so that they can unmute and speak.
Okay. Good. Is David identified or? People nowadays are very experienced with Zoom. So everybody come in last minute.
नहीं होगा ऑडियो। Audible, sir? Yeah. Hello, sir. Welcome. Mr. Albert, can you just one final time check the mic settings? Okay. After that, we will request Mr. KDR also to check this mic.
Also, can you get all the speaker?
He said something. Hello, we can't hear you, sir. Can you speak something?
Can you hear me? Can you hear me?
Yes, I can hear. I think you're not able to hear our voice.
Also,
You can hear me speak. Hello, listen. You want to speak? Yes, spoken.
I'm able to hear you, but are you able to hear me?
Can you please unmute and speak?
Yeah.
You can check whether the mic is fine. Just unmute, like no.
Yeah, Mr. Basta. Yes, Mr. Basta.
Let me know there. I hear like we have that here. Hear you? Yeah. Okay, maybe like there is some issue. Please, it will be able to. No problem. She has a microphone.
Can you hear? All good.
Yeah, my iPhone chat. Who was the brand? Actually, can you speak something?
Hello.
Two speakers.
Varun, can you hear me?
No, sir.
The same message for Zoom and the start me.
Oh, by default चलता है 5 minutes before.
Sure. But पहले
2 घंटा पहले का एक I think मैनुअली आया था.
मुझे नहीं.
2 hours to go के.
2 hours to go नहीं.
हाँ वही आया है.
अटेंडेंस को 200 लोग है ना हमारे पास वो तो पैसे आए.
Attendees ये वहाँ.
उनको Zoom से जाता है by default 5 minutes before. Notification आता है.
नो क्या होता है कुछ काम करेगा आएगा 1 घंटा पहले बस हो गया सर 2 बार 3 बार सुबह भी बोला 2 घंटा पहले मुझे
नहीं वो आया ना सर 2 घंटा पहले.
बार जो समझ नहीं रहा इसने प्रमोशन करने की join new registration. You know what you are talking about. Simply do. Try to do that. समझ नहीं रहा तुम क्या बोल
समझ गए सर
simply वो भी ज्वाइन नहीं करेगा
ओ
देखो डिसा तो ब्लू वायर वाला अच्छा तो वायर वाला
नहीं वो चार्जिंग नहीं
चार्जिंग देखो डिसा but how will he hear actually microphone
नहीं तो इसमें कनेक्ट कर देंगे सर आई विल कनेक्ट दिस
Here you can mute.
Good morning, David.
Morning, how you doing?
It's been a while, yeah?
It has way too long.
Good to see you again.
And you, and you.
Very good, very good. David, after your speech, you will leave us, right? I mean, you're free to leave.
Yeah, thank you, Albert. I have to get up to London, back up to the office. It's,
Yeah, I understand. So after the speech, if there is any question, we'll immediately answer those. If not, then I will release you.
Lovely. Thank you very much.
Yeah. Hmm? No, they just directly go into. We'll start in 5 minutes. What's how many people have registered to become delegate?
The last registration we had 205.
205.
Yeah. I think another 20 would have joined in the morning promotion as well. So maybe you can say around 200.
Yeah.
27 has already joined in. So.
Yes, and you do it.
Which one? The email of V. Yeah. The V1. No. What's 2 minutes to go?
Yes, sir. When you're about to start, please give us a heads up. So we are ready from our side, sir.
What's 1 minute to go? Okay. Good afternoon, ladies and gentlemen. Thank you for joining us today online, and a warm welcome to SBMA 2022 webinar series on Asia Pacific Precious Metal Update. This webinar is organized by SBMA at Eventel to bring together SBMA members, Asia Pacific Precious Metal market participants, and others to provide an update of the global bullion market from the LBMA, World Platinum Investment Council, and World Gold Council perspective in 2022, in the beginning of the year. We have also invited two very representative speakers, my very good friend Som from India and Roland from Beijing, who will be providing an update on India and China gold market, and Nico Cavalas from Metal Focus Singapore on the global precious metal market. This is the first event organized by SBMA and its newly elected management committee in November 2021. Our chairman, KL Yap from Metalor Singapore, will be providing an update of SBMA towards the end of the webinar. Finally, I would like to invite all of you to SBMA upcoming annual event, the 2022 Asia Pacific Purchase Network Conference, APPMC. We will be sharing more details of the days, theme, and how we plan to conduct APPMC 2022. So please stay until the end of this webinar for more information. I would also like every one of you, if you have a question for the speaker, please type that in the chat box below, and I will collate them, and if we have time, we'll ask the speaker to answer the questions. We are going to entertain Q&A immediately after the speaker, if the time allows. Otherwise, we'll collect the question and direct it to the speaker later on. I will now invite Mr. David Tay, Global CEO from World Council, to take over from here. David, please. Good morning to you, very early for you.
Thank you, Albert, and good afternoon to you. Yes, a little bit early here, but
David, you have to unmute. Oh, yeah. Okay. Yeah. Okay.
Okay. Yes, a little bit early here, but thank you, Albert, and good afternoon to all of you. Thank you, SBMA, for inviting me to speak. Asia is a hugely important region for the gold market, as you know. It's a major source of gold supply, and the consumer markets of Greater China, India, and ASEAN are amongst the largest in the world. Some of the most important gold trading centers are also here in Asia: Singapore, Shanghai, and Hong Kong. However, my WGC colleagues will be talking more specifically, as you've heard, about China and India later, so I'm going to talk about some of our global initiatives. 50 years since the closing of the gold window, gold continues to meet the challenges of an uncertain world, but so too must the gold industry. The World Gold Council is striving to advance the frontiers of the gold market by making sure that gold meets the requirements of modern investors. Having worked for many years in the rates and FX markets, I have seen the need for an industry to adapt to the changing requirements of its stakeholders. The need to transform and adapt to a changing environment is now on our doorstep. We are currently on the cusp of the fourth industrial revolution. All sectors of the economy, and indeed the way we lead our lives, are impacted through huge advances in digital technology, and the gold market is not immune. To ensure gold meets the needs and aspirations of individuals and investors in the 21st century, the market should fully grasp the opportunities that new technology provide. Our vision for the gold market is underpinned by digitization and technology. First, the gold market should operate with the highest integrity and proven provenance. Today's consumers and investors demand to know where their gold comes from, who produced it, and whether it has been responsibly and sustainably sourced. Gold needs to have unimpeachable credentials, as maintaining the trust and confidence of consumers, investors, and regulators alike is key to broadening participation and unlocking of latent demand. Second, physical gold has to be fully accessible so that everyone can benefit from its wealth enhancing, risk mitigating, and stabilizing role as a financial asset. This includes being traded 24 hours a day, perhaps, and being fully accessible through contemporary channels, such as digital investment accounts or simply one's iPhone. Thirdly, we want to ensure gold is fully fungible, which means we should be working to harmonize regional silos, reduce market fragmentation, ensure that local and regional gold markets are fully interoperable. The WGC aims to direct significant resources to these three most important areas and hopes that the industry, and in due course the various regulators, can come together and rally around these goals. With the technology at our disposal today, we have never been better placed to bring the global gold industry into the digital era. If we are able to combine our efforts on this agreed future vision, I am confident that gold will remain as relevant as ever in the 21st century. Over the past year, the WGC has been busy laying the foundations of our first pillar of our vision, which is ensuring integrity, transparency, and provenance of the gold supply chain. This vision requires the development of two separate but connected initiatives. The first is the development of standards to ensure gold has been responsibly sourced and sustainably produced. In 2019, we launched the Responsible Gold Mining Principles, and since then, we have been working hard to increase the awareness of the important work undertaken by gold producers to reduce their carbon footprint and meet stringent ESG goals. The WGC and its members also recognize the substantial risks that climate change imposes on the global economy and socio-economic development. Since 2018, we have published annual reports that look into how climate-related risks and opportunities might impact the future prospects of the gold industry. Our latest research, Gold and Climate Change, Decarbonizing Investment Portfolios, was introduced in 2021 and examines gold's potential impact on the carbon profile of investment portfolios and their alignment with climate targets. This report offers investors a greater understanding of the implications of the transition to net zero carbon for gold in the context of global multi-asset portfolios. The WGC and its members have also long believed that responsible gold mining can support sustained socio-economic development for communities and countries that host large-scale gold mining operations. Last year, we took on a quantitative approach and pulled data from our membership to quantify the industry's socio-economic contribution. We found that for each dollar of gold revenue, at least 63 cents remains in the host country, where it accrues as income for employees, businesses, communities, and governments. In addition, given the multiplier effect, for each employee of a gold company, there are almost 6 other jobs created elsewhere in the supply chain and close to 4 more jobs in the broader economy. Equally as important, we also looked into how central bank domestic gold purchase programs can formalize the artisanal and small-scale gold mining industry, increase prosperity, and alleviate some of the social and environmentally damaging issues that beset the industry. And to the second initiative, our work to ensure the highest ESG standards in our industry needs to be pursued in conjunction with the implementation of new technologies that can ease the transition into a truly transparent gold supply chain. And so, on behalf of the industry, and together with the LBMA, the WGC has been exploring the development of a global system of gold bar integrity, which will take the form of a global ledger of all gold bars. The WGC and LBMA hope that by securing the chain of custody and preventing fraudulent or illegitimate bars from entering the formal gold supply chain, we will be able to foster greater trust in the integrity of gold and ultimately increase the participation of financial institutions and retail investors. Gold is a global market with consumer demand coming from across the world, and what happens in one market has reputational implications for us all. But by working together with all international partners in all major gold trading centers, we can create a global system of integrity and provenance that consumers, investors, and regulators can trust. All we need for this to happen is for all global stakeholders to commit to the initiative, come together, and support in making this happen. We must act now without further delay, because for gold, the asset class, to enter the tokenization era without having solved for the lingering provenance and integrity issues that have dogged the industry for so long would be to squander an enormous opportunity, an opportunity to place gold at the front of mind of not only retail and institutional investors, but at the minds of future generations. It is clear that trust is at the heart of WGC initiatives. And in this context, to improve consumer trust in the gold market, we have launched the Retail Gold Investment Principles. These are a comprehensive set of principles encouraging retailer and wholesaler best practice so that customers can feel confident when investing in gold, as well as launching industry initiatives in global markets such as India, Germany, and North America. We have had a number of conversations recently with industry players here in Singapore and look forward to launching the RGIPs formally later this year. To further raise standards and knowledge in our industry, we will also be launching a professional development curriculum for gold in Singapore before rolling it out globally. And finally, we continue to make the case for gold to institutional investors globally. Our research, sales, and marketing teams work to ensure the benefits of gold to investors are well understood, so that gold continues to play a fundamental role in the international financial system. However, it must be remembered that solving for integrity and provenance lowers the barriers many institutional investors have to investing in gold. In conclusion, our aspirations are that gold continues to meet the challenges of tomorrow, and as we strive to improve the gold market, please know that the WGC is available to support the needs of investors and all industry stakeholders alike. Thank you, Albert, for inviting me today.
Thank you, David. I guess it's a very encouraging news about your initiative in Southeast Asia, Singapore in particular, about the RGIP that you just talked about, and also the curriculum that you are building and you are using Singapore as a testing ground. It's something that I will be working with your manager in Singapore and in Southeast Asia. I think the grand vision that you have painted is a very good direction, that, and I think it call for the global stakeholder to come together. And can you tell us how far this has been proceeded? Is it in the beginning stage or mid stage, or you have never started yet?
We have been working in the background for 8 to 10 months with the LBMA. We've examined all potential providers of a system. We have isolated 2 who have gone into a pilot stage. As I mentioned clearly, the WGC are putting significant financial resources behind this project. We are in a position, I should imagine, for adoption of this system, I would say by the middle of this year. We have, Ruth Crowell and I and myself have spoken to all the major stakeholders around the world now, and we have furious agreement that this is necessary and furious agreement that they're going to buy into it. Of course, the proof will be in the pudding, as they say, in the detail. But what I'm asking of all these global stakeholders is to commit to the initiative. Don't, be positive. It will happen if we say it will happen. And clearly, as I mentioned in my words, if we do not solve for this before gold gets tokenized, fully tokenized as an asset class, we are squandering an enormous opportunity. We need to overcome these provenance and integrity issues as fast as we can. And so I would encourage, the WGC will work with everybody to encourage everybody onto this system, because I think by doing so, we improve trust, we will increase participation in the industry, in the asset class, and by definition, raise demand.
Thank you. I would like to invite you back to our APPMC in June to give us more detail. Thank you very much, David.
Thank you, Albert. I'll be delighted to attend.
Thank you. Next, I would like to invite my friend in India, Mr. P.L. Somarudharam, I think I pronounced it right, to give us an update on the Indian market. Som, please.
Hi, good afternoon. As a global asset class, what happens to gold demand in any particular market has a great deal of significance to the broader global markets. More so when times are uncertain as they are currently, and when it pertains to the second largest consuming market, that's India. I'm here to talk to you about what happened in the gold demand in India in the year 2021, most particularly what happened in Q4. Q4 saw a very big jump, 85% jump in it. We have never experienced such a growth in demand. Now it revalidated the strong socioeconomic footprint of gold in the household portfolio and also reflected very strong broader economic recovery. At 344 tons, it exceeded even the most optimistic forecasts that were given at the time of Q3, when we saw the lockdowns easing and things coming back to normal. If you translate it in INR or USD terms, the story is even bigger. The last time we saw such a huge jump was in 2013, when we saw a sharp drop in prices of about 28%, and it was a global phenomenon and people across the globe actually rushed to buy gold. So did India, and that led to certain restrictions like 80-20 subsequently. December quarter 2021 was even higher. And if you actually compare the prices between then and now the prices are 62% higher than what we had seen in 2013. So not only in quantity terms has December quarter surpassed the past, even in value terms at 62% jump, it has actually been one of an unprecedented quarter increase. Now, imagine the amount of investments, therefore, that have flown into gold, into the household wallets, and compare it with the outflow for the full year from the ETFs in the West. Now, that gives you a perspective about how much consumer demand matters, particularly from the East. So clearly, what led to this increase? Pent-up demand, as I mentioned, and resumption of festivities, of which there is no dearth in India. Nearly 18 months, close to 2 years. There were a lot of restrictions around it, so all of them came back. More weddings, more parties, more gifting, and of course, a softer prices. A very, very important insight that we gathered is that maybe 50,000 rupees per 10 grams is now an accepted price point. In 2019, just to give you a data point, beginning of 2019, it was around 31,000 or 32,000 rupees. Today, it is 50,000 rupees. That's the kind of jump we have seen in the 2 years in INR prices. But now these prices seem to be an acceptable range, which means the mantra is less than 50,000, good to buy. More than 50,000, watch, analyze, and then take action. That seems to be the mantra. So softer prices clearly was also a reason for the quarter four. Overall, jewelry demand, excellent recovery. Manufacturing is way ahead of demand, which also shows that there is a huge positive trade sentiment. Bars and coins demand. Clearly, Dhanteras, Diwali, they are periods when people buy bars and coins in India. They also saw an 8-year high, largely due to, as I said, softer prices, people coming out, having money to invest, higher savings because of COVID, lack of expenses towards travel and other stuff. So channelized savings into gold. ETFs saw a 9 tons inflows in 2021, taking total holdings to 38 tons. Now again, ETFs, as if you compare it with the overall demand for India, is a fraction. Still, this seems to be catching the fancy of investors, and this is something which the government also would like to see grow. And of course, the central bank was active. They continued to be active for the last few years, but this year they added 77 tons, the highest since the last purchase from IMF of 200 tons. So this again is very, very positive for the global gold markets that India continues to buy and diversify its reserves. So the next question obviously is, what do we expect in 2022? For the full year 2021, we saw a demand of 797 tons, 800 tons, which is the highest ever since demonetization. So if you really look at the annual demand, average demand for before demonetization, the 5-year annual average, it was 910 tons. Post demonetization and GST and other transparency measures, we saw the average demand drop to 720 tons. Now we have seen at high prices, demand go up to 797, that is 800 tons. So our expectation is that 2022, you will not see a 80 or 85% jump, but we will continue to see maybe the average level go up to 800 to 850 tons, barring any very significant swings in prices, which may, as I said, may make people wait and watch. But looking at the trade and consumer sentiment, it looks to be another good year for gold in India. Thank you very much.
Thank you, Som. And I would like to now invite Mr. Roland Wang, my friends in Beijing, to give us an update in China market. And Roland, the floor is yours.
Hi, good afternoon.
Yes.
Ladies and gentlemen, it's the pleasure for me to be invited to make a very brief introduction about China's gold market updates. Well, first we start from the brief overview, a quick overview about the overall demand in 2021. Obvious from this chart, you can see that the China's gold demand enjoying a quite strong growth year on year, nearly in every aspect of the demand, including jewelry, retail investment, and gold ETF. The growth is not only year on year, strong growth, but also has overpassed the level in the year of 2019. Thanks for the stabilized pandemic control situation in China, recovery economy, a more favorable gold price, effective effort, including the promotions by the trade, new products development by the industry, and the refocus on gold from the younger consumers especially. And next charts actually show we have seen there's due to the various restrictions in commercial banks, retail, brokerage business, and the cooling gold price rising momentum. And the Shanghai Gold Exchange trading volume actually was down by 40% year-on-year comparison. On the meanwhile, we have witnessed the more than 1,750 tons of physical gold in 2021 were withdrawn from SGE, and mainly by the industry users, and 45% year-on-year higher, and is already close to the level before 2019. This actually demonstrated the physical gold demand was back. Can you see the charts?
You want to move the slide?
Yeah.
Okay.
All right. And this actually demonstrates that the physical gold demand was not impacted by the declining trading volume at all, as they are driven by very different groups of people. And next slides, actually, let's have a quick look at what the key trends of gold demand in China in the year of Tiger. Of course, next slides, please. Of course, I can only cover some of the key trends or new trends I want to introduce to share with you. One obvious trend, which lasts in the past 2 years already and will continue in the coming few years, is the surge of the so-called heritage gold jewelry shining. As the Guochao in Chinese, meaning in favor of Chinese national culture, intensified, more and more retailers started to heavily promote the heritage gold category, especially appealing to the young consumers. Surprisingly, more than half of the current purchase of heritage gold jewelry come from the new millennials who love this new category, and this new category could also bring much higher margin for retailers, as long as the pricing structure is more transparent. This chart is coming from the retail survey conducted together with China Gold News. The program pricing method actually for 24-karat gold jewelry is more adopted, accepted by both retailers and consumers. Currently in China's jewelry market, retail market, nearly half of the Chinese gold jewelry products, including both 24 and 18-karat gold, are sold per piece. But many retailers have shifted to adopt the program pricing method again, especially for the heavy-weighted 24-karat gold jewelry. The program pricing method will further boost pricing transparency and will help to remove the trust barriers deterring young consumers, especially in the past. We believe this will help improve the confidence on gold jewelry among consumers in long run. Because of the popularity of heritage gold, one positive sign is that even heavier products become more welcomed. More younger consumers recognize both the financial and adornment value of gold jewelry, And this is the result out of the retailers, consumers research in last year. We also created a model for Chinese gold jewelry demand outlook. And the model tool is published and open for local trading on our WeChat account since last November. It is very easy to use, only contains 3 key variables, which are marriage number, gold price movement, and GDP forecast. And there are 3 scenarios. Our model produced quite positive result for 2022's gold jewelry demand, and the strong gold jewelry sales during the past Chinese New Year holiday period actually boosted our confidence. Bear in mind that the heritage gold and heavier but well-designed products popularity among the younger consumers should also help demand growth, especially in tonnage term. The next chart shows the photos taken at the one of the largest retailers in Beijing during the Chinese New Year holidays. You can see this is packed by the consumers. Well, let's have a look at what the gold investment demand situation will be. The World Gold Council actually is working with.
Roland, can you move the slide one more?
Sorry.
Is this a slide?
Yes, this one. Next one. Yeah, next, yes. The WGC actually is working with local key stakeholders to expand the gold investment products to attract to face to the institution investment request, especially for the portfolio management and asset allocation as the mainstream asset. New types of gold investment products has been invented to fulfill this purpose, especially including the gold-driven insurance asset management fund, which is tailor-made for institutions and high net wealth investors. The chart shows the combination within this fund, which you can see that is mainly consists of 3 groups of investment assets. Bonds, 10%, less than 10% stocks, and with gold, which can be flexible, shifted in between 10 to 15%, depending on the market situation. Next slide. Another very positive progress at the institutional sector for gold investment is at the FOF market, which is fund of fund market. This chart illustrates the gold allocation percentage by the top 10 Chinese FOFs in last year. It is a very positive breakthrough for more institutional investors to have the consistent gold allocation. We believe this trend could continue and expand in the coming years, while the related policy would be further reformed. This next chart actually shows how those fund managers view the gold allocation in their portfolio and the role they play into it. Back into the traditional retail gold investment sector. Next slide, please. We recently published our 2022 Chinese gold market outlook. For factors influencing retail gold demand, the rising inflationary pressure, lowering bond yields, various uncertainties are the key ones. Even though we may face some headwinds, such as the US Fed's monetary policy change and increasing interest rate, etc. However, the commercial banks in China increasingly, they add their efforts in selling physical gold products. Well, because there are other retail gold business are restricted. The younger consumers increasing awareness and attention on wealth management. For example, many even love to start buying from low level, such as savings from buy gram gold bars, both at commercial banks or through online financial channels. This all should help retail investment demand in 2022 onward. Next slides, please. This is the projection coming out of our outlook model. Comparing to a very strong demand last year, on average, actually, our predicted trends are still at all well above pre-pandemic level. Well, furthermore, next slide, we could not forget what the industry is working together for a sustainable future. Since September 2019, after the official announcement of responsible gold mining principles by the World Gold Council, we get the full support and confirmation from all our 4 Chinese member companies. The affirmation process with each member company is underway consistently in the past 2 years already. We have also conducted, next slide, we have also conducted a series of educational work through trade events, seminars to introduce the RGMPs and ESG related topics and concepts. The social and economic contributions on the society and the community by gold industry, as mentioned by David, especially at the gold mining sector, to get more attention and efforts from gold industry in this area, and also for Chinese investment sector to realize and recognize it. This next slide shows one example of, one example of the leading ESG related forum with Sina Finance, in which the representatives from our Chinese member companies participate and share their experiences with keynote speakers from World Gold Council leaders, including our CEO, CFO, and COO. Very impressive viewership data has shown above, mainly from local investors and gold industry. So in summary, we have the strong confidence on gold demand in China this year through the combined efforts by local trade and the World Gold Council. Actually, we see that Tiger will be patrolling, definitely not only crouching in the coming year. Thank you very much for listening. Welcome for any question.
Thank you, Roland. I think what is interesting that you have told us is your product innovation in the institutional sector, which I think it can create example for other market to follow. But I think if I ask you this question, and you may take another 2 hours to talk about it. So I'm not going to let you elaborate. Maybe we can invite you back in June to talk about it. Sure. But I'd like you to answer me one question, which is related to India. Zom have just given us a very optimistic number on India that he is looking at 800 to 850 tons for 2022. I'd like to hear how are you going to predict the consumption in China in 2022?
We can have the full confidence that this year's demand will have a healthy growth again. But same as Song mentioned, that we don't expect to have such more than close to 50% increase as last year, but it will be at least maybe 2 digits growth for sure. That's what we can see from the past 2 months sales. So we can have a quite strong confidence on that. Yeah.
Okay, I'll let you go, and I'd like to invite you back in June to talk about your institutional investment product innovation.
As long as the pandemic situation doesn't stop me.
We can always do virtual.
Okay, thank you.
All right, thank you, Roland. Next, I would like to invite Mr. Paul Wilson, the CEO of World Platinum Investment Council. Well, WPIC has been our member for quite some time, and I think this is probably the first time Paul is speaking in our forum. So, Paul, I'd like you to give us some of the insight and update about the platinum market that both globally and in Asia. Thank you, Paul.
Albert, thank you very much. Can you hear me? Okay.
Yes.
Good. It's an honor to be invited. Thank you to both you and SBMA. Apart from asking me to get up in the middle of the night, I thought I would also wear a tie and show a very old-fashioned respect to you for inviting me onto the platform. So thank you. I do have a few slides, and I'll talk to the slides. I'll give an overview of the platinum market, what's happening, what we're doing, and talk a little bit about China in particular and Asia. If we turn to page 3, that page, let me talk about briefly who we are and what we do. We've been around for 8 years now. encouraging people who want to invest in platinum by providing information and helping in various ways. I'll talk about supply and demand for platinum in 21 and 22, then talk about the investment case for platinum, which we think is quite strong at the moment. And then finally talk about a phenomenon in China where we're seeing massive demand over the last year or more in China. So if we could turn to the next page, that would be helpful. So we've been around for 8 years now, and our vision is really to be facilitators of the investment market for platinum worldwide. And what we would like to see is an ongoing above 10% contribution from investors towards the demand for platinum. If you look at the little chart on the bottom left, what you can see is that in 2019 and 2020, we actually had investments in the region of 20 to 23% of platinum demand, which was quite unusual. The long run before we started up was around about 3% contribution. So we're pleased with the investors' interest. And what we do is we provide research, supply demand analysis, much of which is provided in a very expert way by Metals Focus. And that's, so Nikos will be nice to me when he speaks next. And what we also do is work with the distribution chain and help to market investment products, be they coins, bars, online accounts, etc., platinum accumulation plans, etc. So we work with the distribution to help them to grow their markets and grow penetration. And that's one of the things that we're doing actively in China, Japan, South Korea soon, India soon, and Asia is such an important market for us. In China, Weiben Deng is our head of Asia, fantastic executive who's got a small team that's pushing very well in China, been very important to help encourage the introduction of the Platinum Panda, which was last minted in 2005. And we work also in Australia with ABC Bullion, who are doing a great growth job. So that's overall who we are. If we could turn the page, talk a little bit about supply demand in the last couple of years. The picture in 2020 was one of significant deficit, largely because investment demand was extremely high, but also most of the sectors were on the demand side were strong. What we see top left is the supply picture over the last 2 years. And you see that mine supply recovered from the COVID period last year with quite an increase in production, with also a work in process, ACP, inventory unwind, which boosted production temporarily during 21. So as a result, 21's production went up quite well. Following that, we don't think it'll go up too much in 22. If you look at the demand side, demand came off in 21, largely because of investment going down. And the investment that went down was mainly institutional ETF funds. And most of those were actually in South Africa, where we found that the equities for the mining companies, which are clearly an alternative for investors there, were doing so well, and their profitability was so good that the dividend yields were very, very attractive. And so there was quite a bit of switching out of platinum ETFs into platinum equities. What we see this year is a continued recovery in the automotive market, surprisingly, despite the chip problems. What we're seeing is that they are using the chips to make more expensive and quite often more diesel cars. So the demands for platinum in catalysts has actually gone up last year, and we expect it will this year, despite the overall number of fewer light vehicles. So we're reasonably optimistic going forward, although we will have a surplus this year, a surplus perhaps of about 600,000 ounces, as opposed to the 900,000 deficit that we had in 2020. If we turn to the next page, what we see is that the supply picture has been somewhat constrained. It won't be until 2024 that the production of platinum will have reached the levels that it was at in 2019. So we had this temporary bump in 21 because of a work in process inventory issue. But you need to think of mining supply in platinum as being relatively stable over time. The demand side is interesting, and we think there is considerable demand growth potential worldwide for platinum. One of the issues is in the automotive sector, in heavy duty diesel trucks, we think there's huge potential in China for the loadings on those trucks to increase. And if you look at the loadings in red in the bottom left compared to the loadings in other parts of the world, you see that the apparent loadings in China are a fraction of the loadings that you would expect elsewhere. So we see that as considerable potential. We also have some very strong imports into China, which I'll talk about on the next page, if you don't mind. But the overall supply-demand positive picture for us is around the hydrogen economy. And I think you're probably aware that hydrogen is likely to contribute massively to decarbonization worldwide. And most people know, although not all people know, that platinum is an essential component to producing green hydrogen in electrolyzers, PEM electrolyzers. And it's also an essential catalyst in fuel cell electric vehicles to convert the hydrogen, hopefully green hydrogen, into electricity, into drive vehicles. So we think the potential over the next 2, 3, 4, 5, 6 years will be massive on the demand side. And we think also that once the market realizes that that is going to happen, we will have booming ETF demand also worldwide for platinum. If we turn to the final page, please. It's a very interesting phenomenon we have in China at the moment. The chart top left shows in blue the demand from China for platinum from all sectors, which has been growing over time. And China is the largest consuming nation in the world. The pink areas are the amounts of platinum which are imported in addition into China, for which they are unexplained volumes. So there has been a massive amount of additional platinum imported into China over the last 2 years. Something of the order of 1.4 million ounces have gone into the China market with an unexplained consumption. We think that these higher heavy-duty loadings are probably something to do with that additional demand. We think there is more substitution in gasoline catalysts with platinum going in instead of palladium. And we think also that there is a large amount of that excess, which is a speculative investment. And but it's interesting the way we calculate our numbers, that those investment increases are not counted in our global supply demand. So the 1.4 million ounces actually totally drown or soak up the surplus that I talked about of about 600, 700,000 ounces. So the reality is that there is a tightness in the platinum market worldwide. And one of the phenomena that you see is that the NYMEX stocks, bottom left chart, are now being liberated and in part being reduced to fund the transfers to the China market. So China is driving a massive consumption boom in platinum. And we think that therefore the tight market is supporting price. And we think that going forward with the boom that's coming in the hydrogen and the green economy, times look pretty good for platinum going forward. So we're very enthusiastic and very optimistic. Thank you, Albert. That was all I was going to say. I can't hear you, Albert.
Thank you, Paul. I think you give us a very interesting scenario, and I think particularly the mystery import into China. This is something we all want to know the answer, but it's very difficult to get the answer. Absolutely. But I'd like to give you I'd like to ask you a more forward-looking question, which maybe today you might not have enough time, but maybe I can call you back to talk about it in June. Is how you see the hydrogen market, which is in a very early stage, and do you think that the hydrogen will eventually become a main source of power or energy, which then will have a lot of impact to particularly the platinum supply and demand, and you will also given another aspect of boosting the so-called green economy. So how is your feeling? Is it going to be in the, as you said, 2, 3, 4, 5, 6 years, it become a mainstream source of green energy?
That's a very interesting question, and it's a hugely important question for the platinum markets, Albert. Our view is that it will become a major source of energy. Hydrogen will substitute for natural gas. It will be invested in dramatically. And we're seeing a lot of initiatives in the US. I think they've put several $1 billion against creating green hydrogen. And we see also a lot of offshore wind farms, for example, being connected up to electrolyzers that will, on an offshore basis, convert the excess electricity immediately into hydrogen, which they will then pipe back from the North Sea, for example, using the pipes that previously had been used for natural gas. We see it as a very clean and very intelligent way of decarbonizing, and we think the potential is massive. It's a big topic, and we'd be delighted to talk about it more at any point you want to give us a platform, Albert. Thank you.
Yeah, okay. Thank you, Paul. Thank you. Next, I'd like to invite Next, I would like to invite Nico Cavalas, Managing Director for Singapore, to give us an update on the precious metal market. And of course, he will have bias on particular metal. So I let him talk to you, Nicholas.
Hi, Albert. Hi, Albert. Thank you very much for your introduction. Greetings to everyone. Good afternoon, and many thanks for joining me today. I'm Nikos Kavalis, one of the partners and managing directors of Metals Focus and the Precious Metals Research Consultancy. Today, I will run through how Metals Focus views the current macroeconomic and markets background as far as precious metals are concerned. Before I start, I just would briefly like to thank the SBMA for organizing this event, and especially Albert, who invited me to participate. Their efforts are much appreciated, especially over the last couple of years when traveling has been difficult, and these events have been very important for everyone to stay in touch. If you can move to the next slide, please. So I would first like to start with a caveat. Even when I was putting the finishing touches to my presentation yesterday, the optimist in me had not quite anticipated the swift escalation in eastern Ukraine that we have seen this morning into the afternoon here in Asia. These events have clearly catalyzed the rapid rally across all precious metals, with the gold price
Mr. Nikos, we are not able to hear you, sir. Your voice is not audible, Mr. Nikos.
No, I think Nikos is frozen by the looks of it.
Apologies. It looks like the Wi-Fi dropped here where I am. I think I'm back now. Great. So as I was saying, we are of the view that such geopolitical events tend to have a short-term impact, and eventually we will return to the traditional macro factors. This does suggest that in the next couple of weeks, we may have a liquidation/correction. So among these macro factors, I will start by looking at the price increases that we have been experiencing in recent months around the globe. As you can see from this chart, US inflation recently reached levels not seen since the 1980s. A multitude of factors has contributed to this, including supply chain challenges in the aftermath of the pandemic, labor shortages, and an unprecedented combination of monetary and fiscal stimulus to fight off the impact of COVID on economies, keeping consumption levels high and fueling asset price rallies. While this has helped gold investments and prices, the effect of it has admittedly been muted. Given gold's perceived inflation hedging properties, why has it not rallied more in the face of such an acceleration in prices? If we could move to the next slide, please. Well, in fact, if we look at historical performance, gold's link with inflation is not actually that strong or consistent over time. Looking at the past 20 years, rolling correlation coefficients between gold and both real, actual, as well as inflation expectations have tended to be statistically insignificant and at times counterintuitive, for example, suggesting that inflation was bad for gold. In Vettel's focus view, in fact, the link between inflation and gold, particularly in recent times, is indirect and mainly through the impact of real rates and real yields. Real yields and real rates are, after all, a function of nominal rates and inflation. Consensus expectations that US policy rates will rise to control inflation have therefore capped investor interest in gold. And if we can move to the next slide, please. Meanwhile, markets continue to see this current wave of inflation as having an expiry date. It is certainly true that we can no longer talk about transitory inflation, but if we look at the 5- and 10-year break-evens, it is very clear that the market expects a return to lower, more normal, if you want, levels in the longer term. And I think this is has both positive and negative implications for gold. On the one hand, particularly in the near term, this perception limits or caps interest in the yellow metal. Longer term, however, it also means that the forthcoming rate of the forthcoming rate hiking cycle may be limited in both length and magnitude. And we can look at that a bit more if we move to the next slide, please. So this is very much what US policy rate futures are telling us at the moment. So what I have done here is plot the implied policy rate that the CME CBOT Fed Funds futures suggest over the next 5 years. If we use this as a gauge of market expectations, we can see that we're looking for a very short and aggressive hiking cycle, mostly centered over the next 6 to 12 months. In fact, with 6 hikes within this year alone, followed by a plateau and reversal of policy with cuts seen as early as late 2024. And again, if I could trouble you to shift to the next slide. This is far more limited. Would be a far more limited move than what previous tightening cycles would have normally resulted in. Indeed, if the previous slide's expectations are proven true, the secular decline that we can see in this chart in policy rates that has been in place since the early 80s will continue to look intact. So what does all this mean for the gold price? As far as we're concerned, there are three take-homes from all these discussions. First, the current market expectations of as many as 6 hikes in 2022 seem a little too aggressive to us. Near-term support for prices therefore seems likely as these expectations are adjusted. Second, once policy rates start increasing, liquidations do seem inevitable, particularly as by that point, inflation will also start to decline as some of the supply chain issues that are currently hampering economic activity and creating challenges improve, pushing real rates higher and faster. However, and that's my third point, these declines will be cushioned partly by the limited upside to yields, but also due to the case for gold investments remaining solid in a world where asset prices are rich around the block and all around, and systemic risks continue to abound. If we could move to the next slide, please. So let me briefly now touch on our view on the, let's call them white precious metals. Generally speaking, we believe that silver will continue to move in line with gold, but with its traditional higher volatility. In this regard, the factors that we expect will drive the two metals will be generally aligned, and it will be very much on the back of macroeconomic developments. One additional factor that we expect will play a part in silver investor appetite is the transition that we believe is currently underway in the silver market. As you can see from this chart, Mercator's focus sees the market shifting from a position of structural surpluses throughout the previous decade to one of structural deficits in the decade ahead. In large part, this is due to silver industrial demand's very healthy gains, which we expect will continue in the foreseeable future. Whether this is due to the proliferation of green energy technologies that are heavy users of silver, or increasing use of silver-bearing components in mobility, notwithstanding electrification. So for improvement of the driving experience and the various sensors and electronic components that are in there, we believe that there is healthy growth in the years ahead for silver fabrication. And all this will no doubt offer silver some support. If we move to the next slide, related to this expectation and this changing backdrop for silver, I thought that I would also point out that we have seen a remarkable and sustained strength in bar and coin demand from the retail investor community for silver. In many cases, this has actually exceeded what we are seeing in gold, even though both metals are doing extremely well, and for that matter, palladium as well. Silver seems to be the star performer, certainly in the last 12 months. And all the evidence that we have at the moment suggests that this strength will continue this year and very likely beyond. If we can move to the next slide. So let's now move to platinum group metals. So as far as PGMs are concerned, the chip shortage crisis that we've had has been a massive headwind for palladium, platinum, and rhodium demand over the last 12 months. Frustratingly, this semiconductor crisis has capped vehicle production, even as demand from consumers for new vehicles has been extremely strong. In turn, this has put a cap on PGM demand from this very important sector, which accounts for the lion's share of all three metals demand. There are clear signs that conditions are improving, even though we're not quite out of the woods yet. So later in the year, we expect healthy gains in demand across all three metals, and the tightness that this will result in should support prices, replacing the current geopolitical bid that we're seeing. If we can move to the next slide, please. A more longer term dynamic that I think is worthy of mention is the swing in the relative fundamentals between platinum and palladium that we think lie ahead. For much of the previous decade, the 2010s, our estimates showed that platinum was in a sizable market surplus, whereas palladium was in a market deficit. Changing supply-demand conditions that are currently underway look set to see the tables turn. As you can see in the chart that I have included here, we're looking for palladium moving into, let's say, structural surpluses and platinum moving into a deficit position in the years ahead. And if we can move to the next slide again, and I will end by looking again at returning to the question of Russia and Ukraine and the impact this may have on the market and the extent to which this impact can be lasting. So very, very clearly, as you can see from these charts, Russia is a very important to the palladium market, massive supplier. Sorry, could we move back to the previous slide? Very clearly, we can see that Russia is a massively important supplier of palladium to the global market, and to the extent that sanctions limit the West's ability to buy Russian palladium, it will no doubt continue to support prices. However, we believe that this is unlikely to be something that lasts for a long time. First, we believe that the connection between Russia's major producer and the current regime is limited. And also, very importantly, China is a massive consumer of palladium, so over time, sales could be diverted to that market. However, in the short term, if sanctions do end up being more aggressive than what is currently tabled, this could create disruptions. So there could be a short-term impact on prices that lasts for a few more weeks. And if we move to the next and final slide, with this, I would like to thank everyone for your attention. Once again, thank you, Albert, and the SBMA for your invitation, and welcome any questions you have.
Well, I guess Nicholas, I guess the burning question from the audience is, it seems that the war is looming in Ukraine, and it will definitely have a further impact to the price of gold. But also understand from your presentation that inflation, as you have explained to us, although it might come, it will not be so severe, and it might be short-lived. So it seems that war is short-lived, and the inflation is short-lived. These are all two major factors which have pushed price of precious metal to this level. So, in fact, what is your medium and longer term prospect for all these four precious metals?
Sure.
Your perspective.
Sure. Yeah. So it's quite a varied view. So for gold and silver, we think that for all of them, we think that once the dust settles and the current political bid from the investment community dissipates, we think corrections are likely across all four precious metals. Next stage, we think gold and silver will be supported because of what I mentioned earlier, adjustment of interest rate hike expectations, which we believe have gone a little too far. Beyond that, as the rate hiking cycle starts, we think prices for gold and silver should come out under pressure. We wouldn't be surprised if gold dropped to less than 1,700 by year end.
Wow.
Well, I mean, whether we like it or not, when interest rates start increasing, there is very little that will protect gold. But look, beyond that, we think that the price will be supported because the case for diversification remains solid. For platinum, palladium, we think it's far more fundamentally driven. We think both metals are likely to rally into the second half of the year, particularly as car production ramps up. Beyond that, look, as gold is selling off, platinum will be affected to an extent, whereas palladium is moving into a period of sustained surpluses, and that tends to come with liquidations, and that tends to come with price downside. So over the next 4 or 5 years, we're definitely on balance more bearish palladium and more constructive platinum.
I see. Well, one more question is, during lunchtime, a few of our friends was talking about the Ukraine and the Russian tension, but nobody believed that this is going to be a long drawn war. If that happened, it's going to be a week, 7 days, and it will be over. And then the tension that it has created in the gold market may drop off. Are you in that school, or you have a different view?
Yeah, absolutely. I'm definitely of the school that the direct geopolitical boost to the whole precious metal space is, typically doesn't last. I mean, if you look back at what happened during a number of similar or comparable events in the last 20 years, the boost doesn't tend to last. What in theory could last for palladium is if the sanctions package that is introduced is so dramatic and so aggressive that it, for example, makes all Russian entities unable to touch dollars, have access to dollars, and other payments platforms. I think that would create a more lasting effect. Having said this, I would think that this is unlikely. Palladium is far too important to Western car companies, and Western car companies are far too important to Western economies to risk this.
Well, okay, so I guess time is almost up, but I would love to invite you back in June.
Sure, of course.
To talk about all precious metal again, and I also want you to tell us by then that, which is one of the questions in my mind all the time, is platinum price has always been higher than gold for a long period of time, and then in the last 2 years, it went down, went south. I mean, I hope that someone can explain to me in one day that, or when can platinum price be overtaking gold again in future, and what kind of future is there?
I may have to charge you the cost of our 5-year forecasts to do that, Albert.
I will buy your bottle of champagne.
we can look.
All right. So with that, I thank you very much, Nicholas, and I'd like to now call upon Jeremy East, Senior Representative from LBMA for Asia, and to give us some of the update, and also including what LBMA is going to do in Asia, to give us some enlightenment. Jeremy, I know you are in London, so good morning.
Good morning and good afternoon, Albert. Thank you very much for inviting us today. And it's unfortunate I'm not actually in Hong Kong, where I normally sit, but I'm looking forward to saying a few words about the LBMA. So, as you, I'm sure, all are aware of, the next slide, please. The LBMA's main focus is on standards, and these standards go across various aspects of the market. It could be the physical market with good delivery and responsible gold, or trading markets across infrastructure, and I'll come to that a little bit later. And then also the LBMA represents the market in facing off against regulators, and also there's a lot of work that goes into interaction with the press and the media. Next slide, please. So we put together a strategic plan for the next 3 years. And this plan is basically focused on 4 pillars. As I'm sure everyone is aware, responsible gold and responsible sourcing is one of the most important pillars. And there's been a huge amount of work done on that. This year, or just the end of last year, we released the RGG9, which was the 9th version of the responsible gold guidance. And I believe we're already working on the 10th. And it's just going to be an ongoing process. Also, the physical markets, trading gold bars, and I'll come to that a little bit later, but we're working on security features for gold bars, which will help with the transparency of trading. The technology now has advanced far enough for us to be able to look at the end-to-end supply chain and being able to track the gold bars as they go through different hands. Financial markets, we had some good success last year with the HQLA, and of course trading gold is, as I know, coming from a bank, very much a capital intensive business, and being able to have gold represented as a high quality liquid asset is very important for a bank in terms of the capital that the trading desk has to put up against its transactions, and especially on the loan side, because as we all know, gold from the mine through to the jewelry seller, it's financed all through that supply chain. And if there are increased costs from the bank in terms of financing that supply chain, those costs must be passed on to the consumers of those, so the producers, the refiners, etc. So a very important part for the market to have that taken care of. And then, as I said, also communications. We've recently actually undertaken a members review of our performance, and I'll touch on that a little bit later. But it encourages our membership to get closer to the executive of the LBMA. The next slide, please. So coming up, we have more consultations. So we're coming out to the market for their views. Views on 4 different areas, and we'll be contacting the market for their input on these. So the membership, we recently changed the membership of the LBMA, simplifying it, and it's now in line with the LPPM to have sort of main market members and affiliate members. We also started up a subscriber, but subscriber is not actually a membership, but it's a subscriber is someone who has access to the information and the support from the LBMA, and we're seeing a lot of traction on that side. Also, we're going to be coming out to the membership and also the wider industry for the good delivery list, the accreditation, the standards of the accreditation. Are the standards that we have, are they in line with what we should be doing? Are they too easy? Are they too tight? I think from areas such as India, they may have the view that the bar is too high to get into to have LBMA accreditation. So we're going to be listening to the views on that. And the one that actually already started in terms of consultation is the Precious Metals Code. This, as we know, launched a number of years ago in consultation with the Bank of England. This is being rewritten at the moment. A lot of focus in the Precious Metal Code is actually going to be on the sort of ESG and responsible sourcing side. So there's a little bit of a merging in terms of positions there. And finally, the trading of gold bar integrity, making sure that fundamentally, when we trade gold, the gold bar that we're trading, we can trust it, we know where it's come from, and all the rest of it. So that's going to be a key point for this year. And on that point, the gold bar integrity is an area where I think maybe for the first time, but which is a great thing, the LBMA is working with the World Gold Council on an initiative for a database to register the bars and to be able to trace gold as it moves through the supply chain. We're working together with technology providers, and this is a new initiative for this year, to be able to confirm or be able to be sure of the provenance, the trade flow, where the bar has, whose hands the bar has gone through, although it will be on an anonymous basis, and also the integrity of the bar, to be sure that the gold in the bar is what the bar is what we know it is. We're sure what it is. So on this space, there's a project which is starting. The plan is to develop a database, and this will work alongside the security features, which are being, which is the second part, which will be able to track each particular bar. Next slide, please. The initiative started a year ago by the LBMA in consultation or in conjunction with the OECD, and will continue. Bullion centers, of which Singapore is probably one of the most advanced in terms of governance and etc., is an area which the LBMA is working very hard on. It's more of a, I would say, an area which is a governmental area, making sure that gold is covered by such things as FATF, use of cash in transactions. So there are a number of areas which are quite sort of familiar to all of us in terms of compliance, working in banks, but it's an area which now gold should be entering. And so gold would be effectively, could be seen like cash. So focusing on areas such as the use of cash in transactions, sanctions, financial crime, but also in a way to support the ASM, to support the artisanal miners who have been having a very challenging time in the past few years. The next slide, please. So as we had our our review, we were happy to see 67% of our members are happy with our service. There are a number of areas which the membership were keen on pushing us harder, and that is sort of road shows. We did a very kind of extensive roadshow last year, a number of roadshows across China. We had one-on-one meetings with all the members and also with the Good Delivery accredited refiners. So for us, it's very important. So based in London, developing initiatives such as responsible goals and all the rest of it, but it's important to make sure that these initiatives go out to the membership and go out to the Good Delivery refiners, so they fully understand what is required of them, all the details regarding auditing the production and all the rest of it. So basically spreading the word, and we're going to be continuing this this year. And I had a short conversation with Albert towards the end of last year, and we'll be looking to work with the SBMA and potentially have a number of joint venture virtual calls across Southeast Asia. Last year was very much a focus on Northeast Asia, but I think we'll be looking at expanding our virtual roadshow to Southeast Asia. Also engaging with the membership and explaining what we're doing and explaining that probably better than we have done in the past. And as I said, we're opening the door very much to our members to be able to come to us with their problems. And that goes not just from myself, but also up to Ruth. Next slide, please. And now something which looks to be coming back. events, face-to-face events. We've got we have the conference coming up in Lisbon this year in October, finally, after I think 2 years. But towards the end of March, we have the Responsible Sourcing Summit in London, which will be a face-to-face event. So we're back on the road again, hopefully be able to see our members and to see the gold market as we have in the past. In addition to the events, we're also launching, I think we have one coming up next week, our training session, the next round of training for the London gold market. There are 2 modules for training. One is really kind of an introduction to the London market, the LBMA, and the other one is how to use the London market, using the OTC market. So those are coming up very soon, and they'll be rolled out on a regular basis. So they'll be available to new participants of the market, and we're seeing a lot of interest in these courses, especially coming from areas such as China, as Chinese companies, refiners, become more active in the international markets and want to learn more about London. And last slide, please. And I'd just like to finish by saying, looking forward to seeing you all in Lisbon. And here in London, to be honest, you wouldn't know COVID existed. There are no masks, there's nothing. It's hopefully that's going to be the future for the rest of the world. Thank you very much.
Thank you, Jeremy. I guess what you have shared is all positive development in the London market, and what you also have mentioned about further engagement with the membership base, and I know that in Southeast Asia there are relatively less members of LBMA, and although there are quite a number of global members have representation in Southeast Asia, but if the London market would like to actually understand more about this part of the world, I think engagement is very important. And going forward, I think we can work together, and maybe some of this can be extended to non-member, if that is something that in your mind, because before they become member, they have to be non-member for a while, so I think further engagement, as you just put it up, and the 4 areas of engagement, we might not be necessarily know every detail. So that could be a future discussion that we can both work together.
I think you're absolutely right. You've got, you know, the gold market is developing in a number of different regions. So the way I see it is we've got the well-established markets, and they have their sort of well-established principles. But we've got other markets which are developing. You know, maybe Vietnam becomes an international market. And I think it's good for us to be able to reach out to them and to explain what our principles are. And so when they do launch, then they can hopefully take into consideration the principles that we've been working under. Yeah, certainly. Jeremy, for argument's sake, Vietnam used to be the standard for Southeast Asia. They create a standard and let other people follow them. Okay, you're the expert. Anyway, with that, I'd like to thank Jeremy East, Senior Representative Asia of LBMA. And now I'd like to ask our chairman, KL Yap, to give us some update about our association. And soon, KL, please.
Good morning, good afternoon. It's indeed fruitful and rewarding to receive the different markets update from all the industry experts. On behalf of SBMA, a big thank you and appreciation to all distinguished speakers today. For the final agenda, please allow me to share the latest update of SBMA. We have 48 members as of 31st December 2021. One new joined in January, We have 3 to 5 new potential members in the midst of application. We have revised Constitution to empower management community to have more discretion in approving qualifying entities to be part of the association. We expect to see a more diverse membership base moving forward as we connect further and deeper into the bullion community in ASEAN countries. For global regional collaboration, we will continue to strengthen our connectivity with LBMA, WGC, WPIC, SGE, and CGSE through close exchanges and dialogues. For joint initiative with LBMA, members of the SBMA understand and encouraged to embrace the Responsible Gold Guidance version 9. For LBMA Global Precious Metal Code, we encourage our members to implement in accordance to their scope of business. Collaboration with World Gold Council, Retail Gold Investment Principle, we encourage our members to promote transparent and fair practice among retail investment service providers. On professional development curriculum, we work with SBMA members and industry partners toward attracting and training the future batch of market professionals. In Singapore, we continue to work with MinLaw to help members understand and enforce AML and CFT initiative, and continue to be working closely with ESG to build Singapore as a precious metal hub. For marketing reach out, we will continue to issue our quarterly Crucible newsletter. Please reach out to our secretariats for article and advertising contribution in our Crucible or website banners. We have also expanded our secretariat service to provide marketing support to members, business partner in accordance to your business needs. So based on the current outlook, Singapore remains cautiously open to the rest of the world. We remain optimistic to conduct a hybrid APPMC meeting this year. Kindly mark your calendar, 5th to 7th of June 2022. I repeat, 5th to 7th of June 2022. We certainly look forward to reconnect our global business partners and friends at the APPMC so we can exchange the latest market development in your country. Thank you and see you all in June.
Okay, thank you for your remarks, and I will not let you go. I'd like to ask you a question.
Yep.
That last 2 years of COVID situation, how much difficulty you have experienced in the last 2 years? But at the end of the day, is there a big impact to your business or to the general business in Singapore? Are we actually being impacted very severely, or we actually are impacted positively?
Yeah, I think of course COVID started 2 years back. I think in the initial 2020, I think most of the this European country was being closed. At that time, you can see that there's a big business flow in 2020, and of course situation changes totally last year. That the East Asia started to close up the overall countries, and last year of course we see a significant reduction of business activity because of this lockdown in Asia, and I think with especially in Indonesia, we see a very big reduction of overall business volume flowing out. But however, I think Thailand was still active in 2021. So I think to conclude, I think 2021 is a bit slower, in terms of over volume here in Asia. But looking forward in this year, with the Omicron, I think at the peak for most countries, and I believe that there should be a herd immunity forming whether in the European or even ASEAN countries. We expect and are positive to see more business flow year of time.
That's good to know, and I'd like to fulfill my promise that after KL speaks, I'd like to update you on the SBMA thinking about.
Albert, I think you could turn your own microphone on.
Sorry, KL. And I just unmute myself. So I have to. So with this, I'd like to fulfill my promise that I'd like to update you on what are we going to do with the APPMC. Now, as KL has announced, the date is fixed on June 5th, 6th, 7th. It's Sunday, Monday, Tuesday in Singapore, and it's going to be a hybrid. But due to this fluid situation, because of the pandemic and Omicron in particular, and we don't know whether in the near future would there be any other variant. So this is still very fluid. The organizing team will decide in end March on how we can further add value to the 2022 APPMC. However, we have spoken to a lot of potential participants and sponsors. We see a lot of enthusiasm and willingness from the industry patron to travel and to attend the APPMC. They say if we organize it, they will come. We are planning for a few possible scenarios depending on the global situation nearer to the date. I here list 3. Let's say Plan A. Plan A is a hybrid format with in-person physical conference in Singapore. Number of participants for physical conference will be decided based upon Singapore government advisory during the last week of April 2022. Plan B, virtual only. If Omicron intensifies and it becomes clear that physical conference is not possible during the 5th to 7th June in Singapore. However, this looks like the most unlikely scenario as things are opening up and Singapore follow the Western world of living with COVID. So we expect that the market is going to be further opening up. And we hope that more positive news will come. Plan C. We are also looking at the possibility of moving part of physical format to Bangkok. Now, these are requests from some of our members. In case regulators in Thailand are easier to obtain than any other ASEAN region. And air travel is possible. And but we will also, even if we do that, we will also air this virtually to all the delegates who have registered. So it will be virtual as well during if we have a physical conference in Bangkok. This could be conducted in conjunction with either Plan A or Plan B. So in other words, in short, there will be a conference in June 5th to 6th. Mark your calendar, and we will continue to monitor the COVID development and keep all of you updated. After this webinar, Eventel will send out questionnaire to all the participants to seek your response, and we are keen, and also to understand whether if you are overseas delegate, overseas participant, whether you are keen to travel to Singapore or Bangkok in June. We will appreciate your quick response as this will help us for the planning purpose. Now, we come to the end of this 1.5 hour conference. I promise that we are not going to make you stay too long because this is the attention span that most people have on webinar. But I would like to pass it back to Vasa. Vasa has some message for you as well. And he also has some bright idea to say that we leave it open on this webinar for people to chat with each other. Vasa, can you explain it further?
Thank you very much, Mr. Albert. With this, we come to the With this, we come to the end of the SBMA webinar series 1. But before we leave you for networking through chat box, we would like to take this opportunity to thank all our speakers today, Mr. David Tate, Mr. P.R. Somasundaram, Mr. Roland Wang, Mr. Paul Wilson, Mr. Nikos Kavalis, Mr. Jeremy East, Mr. K.L. Yap, and Mr. Albert Cheng for their wonderful presentation and sharing with us huge insights. We will have many more webinar series as we go along, but most important, do not forget to block your dates 5th, 6th, 7th June 2022. I have one last announcement. In March, on 12th of March 2022, there would be 7th India International Bullion Summit, IIBS. It is organized by India Bullion and Jewelers Association Limited, the largest association that represents the interest of gold bullion and gold jewelry in India. And if you happen to be in India, please make it a point to be there on 12th March 2022. With this, I would request you, we will keep the chat box open for at least half an hour so that you can exchange notes over chat with your colleagues, friends, and acquaintances, and enjoy the networking for the next half an hour or so. Thank you all for joining us and making this conference and making this webinar very enriching. Please mark the dates 5, 6, 7 June 2022. Happy networking.
Thank you. I will keep my chatbot open. See. I'll see.